Welcome to this week's Forex forecast for the week ending September 13th, 2024. Today we're talking about the DXY, the euro, the pound, the Australian dollar, and also gold. So just a few moments ago, guys, we had NFP come out, so non-farm payroll, and we are seeing markets react, rather aggressively to that news. And you can see here where the DXY came into that key support area that we talked about. Now, I'm not going to get into NFP and the numbers and what they all mean, because as you guys know, or probably know, I am all about technical analysis. I am a 100% technical trader. Just to be blunt about it, guys, anybody who thinks that you can't trade based on technicals alone is completely wrong, because you absolutely can. In fact, I prefer it. And this right here proves it, because yesterday we talked about this area. In fact, we've been talking about this area for the last week. And if you saw yesterday's video on the EURUSD, we also talked about the DXY and this area right down here. Okay, so what I said in that video was that the DXY, if it's going to bounce from here, it needs to hold above 100.6. And look where this wick here today came right into that area. Now, we did see a sweep here, okay, which is pretty common for NFP, given the volatility that we typically see from events like that. Now, what I said yesterday too, what I ended that video with, was that we could just get this here from the DXY. So the move up here, the move down here to test support once again, test this consolidation down here between 100.6 and 100.85, which we clearly got. And then next week, potentially, a move up here toward the 102 area. Now, keep in mind that 102 extends from 101.92, which this right here is the same level I've had on my chart now for months, right at 101.92. And this high is exactly 101.92. So we saw that tested exactly this past week. So from here, guys, as long as the market is above this area down here, then I favor a move back there toward the 102 area next week. But just keep in mind that 102 extends from about 101.92 all the way up to about 102.6. So this entire area for the DXY is going to be critical resistance based on factors that we've talked about before. So first of all, you can see that 101.92 is a key horizontal here for the DXY going all the way back here to these lows from June of last year. So if we map this out, you can see that back here we had lows off of this level here. Again, lows through here. Very similar pattern from the DXY in this area. Now, the level as far as 102.6 is going to be this channel right here. So if we look at the highs going all the way back here to March of 2023, you can see these two highs up here, and we have a parallel level off of these lows. So what I've said, in the past, and what I say all the time, is that markets love symmetry. What that means is that you can see here that this is what we got from the DXY for years, okay? Now, this failure to extend above 106.5 was a sign of weakness for the EURUSD, and this right here, this breakdown through here, is when I started to turn a little bit more bearish on the US dollar. Okay, so this level up here at 102.6 is going to be the bottom of this channel right here. So this is going to be a critical resistance area for the US dollar. But again, with the market coming off of that December 2023 low, it does kind of look like that we could get some dollar strength next week. Now, what's going to be key for this, guys, is how today closes. Because keep in mind that there are still several hours left in today's session. So how this candle closes here on Friday is going to determine what we get next week. So if we get the market holding where it is right now, then we probably see a fill of today's lower wick next week, and then potentially from there a bounce up here toward the 102 area. All right, so that's my plan for next week. Of course, if we see the DXY close below this area down here in this region, then that would expose 99.6. But as long as we're holding within this range, then I think trading the DXY as a ranging market makes a lot of sense. Okay, so next up we have the EURUSD, which we're seeing the market react from that December 2023 high. So this market so far, guys, if you've seen recent videos, this is pretty much playing out exactly as I thought it might. And that's not me just saying that. But if you've seen recent videos, what I was talking about here was the potential for a more substantial retest of that 111.20 to 111.40 area, which we got here today. I also told you guys in yesterday's video to be really careful with NFP. And it's not something you probably want to try to front run for this very reason. Now, just to kind of explain this before we get into the 4-hour time frame, what happened here recently with the euro, this move above that December 2023 high is there was liquidity sitting above this, and that's what we saw through here. Now, the failure to hold above this level though through here signaled that this up here was a fake out. And typically a fake out to one side of a pattern or level triggers an extended move in the opposite direction. So for the euro, that would be lower. So that's exactly what we're getting here today. All this is just a retest of the failed level, which is that area around 111.40. Now, if we take a look here at the 4-hour time frame, what I've talked about this week, okay, you can see here that this is the ascending channel that we've had here for the euro for quite some time. And this level, okay, we saw the market close back below it through here, and it was retested several times, including today's session. Now, what I've said recently as far as looking for shorts here is that it made the most sense, in my opinion, to look for a reaction from NFP and look for a more substantial reaction up here in this area. And the reason for that was this lower level right here. Okay, so this lower level off of all these lows and these two highs up here. So this gave you a parallel channel to give some structure to what we've seen here from the euro over the past few days. So this is exactly in line with what we've talked about recently, including yesterday's video. In fact, I made two videos here, Wednesday and Thursday, both talked about this area up here around 111.20 to 111.40. Look, having been a trader for over 20 years, I know how difficult it can be to find a trustworthy broker. And that's why I'm excited to share with you the broker that I've trusted for 7 years now. I've even met them in person. So I would literally trust these guys with my life. And that is Blueberry Markets, where you can trade over 300 instruments in the Forex market, share CFDs, crypto CFDs, commodities, and also indices. Plus, they have 24/7 support, so no more waiting forever for replies. You can get help no matter where you live. And funding your account or withdrawing from your account is super easy and quick with options like MasterCard, Visa, bank transfers, and Skrill. But don't just take my word for it. They serve over 50,000 traders who can use platforms like MT4, MT5, and their web trader. And they have stellar reviews across sites like Trustpilot and Google. So click on the link at the top of this video or see the link in the description. And when you use my link, you are going to get a 30% deposit bonus. So if you deposit $10,000, they're going to give you $3,000 to trade with. With trusted support, hundreds of trading options, and unbeatable reviews, Blueberry Markets is the broker for you. So going into next week, what could we see here from the euro? Well, knowing that this is essentially the inverse of the DXY, what I would be looking for is potentially a fill up here in this area, or at least a retest here early next week to kind of fill in some of this upper wick. Now, this assumes that the euro closes approximately where it is currently. We still have several hours left in today's session on Friday, so that is going to matter. But if this upper wick stands next week, then this up here is creating a slight imbalance here for the market. So we could see that filled early next week before we get a continuation lower to really test this area around 110. So that's my plan for the euro next week. Bottom line here, guys, is as long as it's below this red box right here, that December 2023 high, then I am relatively bearish on the euro. And that's simply because, again, the market failed to hold above that area back here. So next up, let's talk about the pound here, GBPUSD, as it once again tests this critical support area. So this high right here for the pound, this is the 2023 high. And you can see where we got a reaction here recently. And specifically, this diagonal here that I talked about, which is a parallel off of these two lows down here. So we've talked about this channel before, the fact that we got the breakout through here. And what I mentioned in the last GBPUSD video, I believe that was on Tuesday, is I said that 131 had to fail here before you looked for shorts. And obviously that was just my opinion, but the reason for that was this level up here, okay, this diagonal up here across these highs. And what you'll notice is that we never got to close below this. So if you were shorting this market based on that video, and this isn't an I told you so kind of thing, but if you were shorting the pound based on that video, you did not wait for the market to close below here. We need a sustained break back below that 131 area to really set this up for the move lower toward levels like 130. So the same rules apply today, right? We saw the market move higher, sweep some of these early shorts here, and once again coming into this key support. So, same rules apply. If the pound closes below here today, then this area flips to resistance, and we're looking at that move, potentially down here toward the 130 area. Now, that could be more substantial for the pound, like I've said recently, because it would confirm this entire move up here as a fake out from this channel. Okay, so if we get this, then this could set the pound up for a much lower move over the coming weeks, not just the coming days, but potentially weeks and even months. Because like I've said recently, a fake out to one side of a pattern like this, you typically get an extended move in the opposite direction. So this area through here, in my opinion, is the one to watch for the pound, to where if we get a sustained break below here on the higher time frames, that could set up the move, lower down here towards some of these levels over the coming weeks, because that would confirm that fake out. All right, so next we have the Australian dollar, which if you guys saw last week's forecast, you know about this area around 68. This was resistance here for this market. And more specifically, we also talked about this trend line here off of these closing prices. So if you look at the 4-hour time frame, you can see that we have a trend line off of the closing price right down here. So we have this closing price, we've got this close, this low through here, and the closing prices through this area. Now, what I said in the last weekly forecast was that this right here was signaling weakness. Okay, so if we got the break below, then this area around 67.50, 67.60 would flip to new resistance. Okay, basically this red box up here, sure enough, look where the market came into today and is selling off aggressively. So knowing that this down here was critical support, right? Guess what happens if we get the close below today? This area up here would flip to new resistance for the Australian dollar going into next week. Furthermore, what you can see here is that we have the potential. Now, granted, this is on the 4-hour time frame, so it is an intraday pattern, so keep that in mind. It's a little bit less reliable than something on the daily, but we do have the market confirming or starting to confirm potentially a head and shoulders here. Okay, so notice how we have the potential left shoulder over here. We've got the head up here and now right shoulder. So this could set up, if the market can hold below this area through here, right around 67 next week. Okay. Now, again, this, assumes that the market is going to close where it is now. If it closes back up here above this green box, then it's still intact as support going into next week. So that's really, really critical. Do not try to front run this. In my opinion, when it's Friday and you're looking at a market like this, you're better off just doing nothing and waiting for the market to either confirm a breakdown like this or hold support and then trade it next week. Okay. Because the other thing too, you've got to understand is that when you get a candle like this here on Friday, a lot of times the market will fill this in early next week because it creates an imbalance up here in this area. So chances are, if we get a key breakdown here today below 67, we are likely to get a retest up here before we get a resumption of this move lower, potentially down there toward areas like 66 and maybe lower. And last up is gold, XAUUSD. So we have the market ranging here, something that we've talked about over the past couple weeks here. So the range between 25.27 all the way down here to about 24.75, this is what we've talked about here for gold over the past few weeks. So, same rules apply. We still have the resistance area up here. So let's mark that out. We've got resistance up here off of these highs and support down here at this green box. So you can see where this past week we did get a retest down here. Nice little bounce, some bullish candles here with long lower wicks. And now today we are getting that retest of 25.27, followed by that sell-off on US dollar strength, right? Because gold tends to move inversely to the USD. So for next week, what this is going to come down to is, you can see here, we've talked about this before, but these highs up here, this is the top of a slightly ascending channel here. And you can see where so far we have not gotten a daily close below this. Furthermore, you've got these highs right back here. So we've got a horizontal area through here, right around 24.75, that is going to be key support. Now, if we see gold break below this, okay, then that's going to open up levels like this down here, which there's not a lot of room between 24.75 and this diagonal. Okay, so you've got to be careful if you're trying to play a breakdown from that. In my opinion, the better approach here, if you are looking for a short, would be for gold to not only break back below this level here and also this one, but to essentially get below this entire area, okay? Also get below this diagonal, because if it does that and breaks below here, then guess what? We're probably looking at a move down here toward the bottom of this larger channel, okay? Which gives you a lot more room to work with. So this level over here, if we get a break below this level here, now obviously we're making a lot of assumptions here considering that gold is still above support, but if over the coming days we do get US dollar strength, then we could get that breakdown below this area and potentially below this one, in which case you're looking at a move down here toward these lows and potentially a completion of this channel, okay? So that gives you a lot more room through here to work with on a break below this diagonal. So again, be careful if you're looking for a break below 24.75. You could get yourself in trouble looking for shorts there. Now, the bullish side of things, okay, if we get gold moving higher, which so far today, guys, I mean, this is a pretty bearish looking candle so far. But if we get gold breaking above this area up here, so right around 25.27 or so, okay, breaking above this next week, and keep in mind, it has to hold above this today. But if it breaks above this, then we could be looking at that move up there toward 25.80, potentially a little bit higher to complete that symmetry off of this channel from June. All right, so that's how I see things right now. Obviously still a very range-bound market, but playing a breakout from this could also be very lucrative, as has been the range trade that's persisted now for weeks. Subscribe to the channel and click the bell for notifications. Don't forget to join us in VIP. Claim your 90% off lifetime access. See the link in the description of this video, or if you're on the website, click on that Join VIP link. Have a wonderful weekend, and I will talk to you again next week.